Federal Reserve members are considering cutting back on their quantitative easing efforts, and a number of big banks have come out and lowered their price forecasts on gold. Here with us to talk about whether you should be getting out of gold right now is Christopher Blasi. He is of Neptune Global Holdings. Chris, thanks for being here.
Thank you, Joe.
So you heard it. Should people be getting out of gold at this point? Sounds like everything's coming down.
Well, what we're hearing about the Federal Reserve and some members, in the minutes expressing that they might cut back, this is actually nothing new. We've heard this throughout the years, throughout these 12 years of this gold bull market. Now, for short-term traders, this has an effect, and it makes a big difference. So we look at the reaction today, and this type of pressure may carry going forward for a couple of weeks. For the longer-term holders, the ones who are putting it in their portfolio as a hedge against the dollar and the currency wars, we're not changing our position, that it should still be in there, and probably using where we are now with this kind of pullback as an opportunity to either add or add to your position.
So longer term, a year down the road, 2 years down the road, break them down into both of those categories. Where do you see the price of the yellow metal going?
That's great. So right now, people are saying gold is down, but it depends on what currency you're talking about.
Right.
So right now, gold's doing fantastic in the yen. We know what Japan is doing and the Bank of Japan. So once that runs its course, we believe at the later part of this year, you're actually going to see action that's going to kind of devalue the dollar, and you're going to see gold rally in the dollar. So it would not surprise me to see gold at the end of the year probably closing out 2013 north of $1,750, maybe $1,800 an ounce.
Interesting. And what do you think in 2 years?
In 2 years, I think we have a very strong possibility of being $2,200 to $2,400.
And to move back to, you kind of jumped to what my next question was going to be, and that is buying gold in yen. Can you explain to investors who are probably only familiar with buying gold in dollars why buying gold in yen might be an attractive prospect?
Well, for nimble traders who know how to short the yen and use that and deploy that to gold, it's a great trade. So for those capable of doing that or working with an advisor or a firm that's able to do that, it can be quite lucrative.
And finally, we'll again jump back to your 2-year prospect. You said over $2,000. What would drive gold to $2,000 in 2 years?
Well, when we talk about the Fed maybe pulling back, we just believe that's a little dissent. The end of the day, who would fill the gap? Who's going to step in for the Fed? If they were to do that, what would that mean to rates? So we believe, as this has been the case for the last 5-6 years, the Fed will continue to put stimulus into the economy. We're going to continue to see debt grow. We're going to continue to see a Congress and a White House that are basically dysfunctional in the eyes of the world from a fiscal and monetary perspective. And again, that's going to continue to benefit gold.
Chris, thanks so much.
Great. Thank you, Joe.
You heard it from Chris. Keep an eye short term on how gold is going to react, because it does seem a little volatile. And in retrospect, when you look at the banks changing their forecasts and, of course, the Fed coming back and potentially wanting to scale back on quantitative easing. But long term, Chris is still thinking that there's so much in place that's going to allow for the gold to continue to move upwards. I'm Joe Doe, The Street.